Hello traders and investors, welcome back to the Trend Trader channel. You are probably wondering why we have that introduction today. Remember, we had a two-channel Trend Trader which was dedicated to trading and more technical analysis, but also we had the Mzansi channel which was more dedicated to investing and dividend investing. So now we'll be bringing that content from Mzansi Investor, adding that content into the Trend Trader channel. So what's going to happen in future? We'll still be doing technical analysis and we'll also be doing trading. At the same time, we'll also be looking at companies that pay dividends. We'll be touching a lot more on some part of fundamental analysis. But for my personal trading, it won't change. I will still trade using trading. Sorry. From my side, nothing is going to change. I'm still going to trade using technical analysis first. All my trading decisions will be based on technical analysis. But for the viewers and subscribers of this channel, those who appreciate a bit of fundamental information regarding the companies that you look at, that is why now we will be incorporating a bit of some news of fundamental analysis. So from now on moving forward, for some companies, not all, for some companies we will look maybe at the company annual report and just briefly describe what the company does, and then after that we'll do a chart. We'll analyze the stock using technical analysis. All our buy or sell ideas are still based on technical analysis. It's just that we'll be giving a brief introduction or a brief information about the companies that we'll be talking about. So nothing much is going to change on the Trend Trader channel. As you saw earlier, we were talking about the Balo World special dividend. That kind of information is the information that we were pushing on the other channel, but now we are bringing back all that information into this one channel, Trend Trader channel. So now it's no longer just a technical analysis and a trading channel. Now it's going to incorporate a bit of investing stuff, and also going to put in a bit of fundamental analysis. So for those that was booked by technical analysis previously, at least now we'll just give you something that will keep you happy a bit. So like always, I would like to ask you that you consider subscribing to the channel, and after you've watched this video, please make sure that you like it. So in today's video, we're going to be looking at a few companies. These companies, they pay dividends, so it's good news for those people who are chasing dividends. These companies, they pay dividends, but in addition to that, we see some good technical setups. So we'll be discussing the company businesses a bit, and also talk about the dividend, give dividend information of these companies, and then look at the chart of each business. So stay tuned, make sure that you watch this video till the end, and then if you enjoy it or find it insightful, make sure that you smash that like button. All right, so we're going to be looking at 4 companies, like I mentioned. These companies, they pay dividends, and the chart, they show that they are potentially on an uptrend. Okay, so the first stock that we're going to be looking at is Glencore. Glencore, it's a diversified miner. So I will try not to read what is written on the website, but you can go to the company's website to get more information about the background of that particular company. So in this case, we're looking at Glencore. Glencore is a diversified miner. I actually prefer to invest in diversified miners rather than investing in a single commodity miner. So when you look at Glencore, we see that they do metals and minerals, different kinds of metals and minerals. They have copper, cobalt, nickel, zinc, some lead, some iron alloys, aluminum, and gold and silver. But they also participate in energy products. As you can see that they have thermal coal and crude oil, and then they have the marketing of this product and recycling of some of these products. All this information, you will find it in the Glencore website. And then if you go under investors tab, that's where you're going to find some information about or financial information about the company. So just a brief overview. Let me see if there's anything that I'm interested in here. Okay, I'm not interested in these figures. So I've already went to the investors tab and found this information. This is the result for the a month that ended on the 30th of June 2021. So it's their most recent result that I could find there. So basically in this statement of income, there are a few things that I'm interested in. So I'll briefly discuss those things that I'm interested in whenever I'm looking at the financial statement of a company. So one of the things I want to look at revenue. In this case, I want to see if this revenue, the recent revenue, is growing compared to the previous revenue. As you can see, in 2020, they generated about 70 million US dollars, and then it increased by about 23 million to 93 million. So if I see an increase in revenue, then it's good, it looks good on me. I mean, it looks good. I'll be interested in that company. But if you scroll down there in that revenue, remember that they have to subtract a lot of things, including tax, among other things. And then at the end, then you can see that they have earnings. Right. So earnings, they tell us about the profitability of the business. So as you can see, there's either earnings or loss per share. In this case, I'm looking for a positive figure, meaning that I want to see earnings rather than losses per share. So when you look at the recent data, you see that they have 0.1 cent. Remember, these are US cents compared to the previous loss of 20 cents. So there's an improvement from this, from a minus 20 cent loss to a positive result. So I'm happy with this figure. It shows that the company is improving its financials, and it also shows that the company is profitable. Like if you look at the income for the period, you see they generated an income of 947 million. So I think the revenue up there, it's 93 billion US dollars, not 93 million, 93 billion US dollars. And then the income for the year, it's a profit of 945 million US dollars. That comes from a previous loss of about 4.5 billion. So that's a significant improvement there from this result. So like I said, all my decision is based on technical analysis, but I like to look at something like a statement of income, and then sometimes I do look not at the comprehensive statement of comprehensive income. I prefer to look at the balance sheet. So it depends on what they will call the balance sheet. But from the balance sheet, what I want to look at is the asset and the liabilities. I'm more interested in current assets. So what I look at in this case, you see the current asset are about 48 million. Let me just make sure. Yeah, it's 48 million. So they also have 48 million current asset, and then we compare this with the current liabilities. So we see the current liabilities are less than, because they are 45 million, meaning that there is a positive figure of just about 3 million US dollars. This information tells us that this company has a positive working capital, right? So now that we know this piece of information, then now we can go to the chart so that you can see them and then find a reason for investing in this company using technical analysis. So as you see, the share price is on a strong uptrend. It's been moving sideways. We see a lot of series of higher highs and higher lows there, as you can see. But the recent, or the most interesting thing that brought this stock into my attention is that now it has been, as it was on an uptrend, it had this resistance level here around 8 rand per share. And then, as you can see, started to consolidate sideways. So today it broke above this resistance level. It's currently trading at 81 rand 51 cent per share. Even though the volume is a bit low, one of the reasons why the volume is low, it's because we are in the festive season. There are not a lot of people that are in the market. Well, if it was an ordinary day, if you see a low volume but a breakout, it's possible that breakout might fail. But in this case, the low volume is not due to a breakout or a fake breakout. The volatility, the low volume that we see there is mainly due to the inactiveness of participants in the market. Most people are in holiday spirit now. They're not paying attention there, but that doesn't mean that we're going to miss trading opportunities. So the reason why I'm interested in Glencore is because of this breakout of this resistance level there. So from where it is, depending on your risk appetite. If you prefer to have a tight stop loss, you can have a stop loss somewhere around 76 Rand per share. Or if you have a high risk appetite, you can just have a stop loss just below 68 Rand per share, where the stock was previously consolidating. But remember, as much as we touched a bit on the company information that we looked at the financial statement, what makes me want to buy a Glencore is the technical setup, not necessarily the financials there. But like I said, since we spoke about dividends, you see here on the charts, all these they show when the company paid dividends, and they show when the company reported the result. So these are the earnings result. Normally, when a company reports their result, if the company made profit and they have some money that they want to pass to shareholders, then the board can declare dividend. So in this case, you see they will always come after that I don't think that there can be a special dividend before the earnings result out. So in this case, we see that the last result was just, the last dividend was paid around September. The one before that was paid around May. Already we can see here, we're expecting to see some results before March. I think that is going to happen around February or so. So depending on how these results are going to be, if the stock continue to be on an uptrend and they report improved profit and improved earnings per share, then we can expect Glencore to continue to trade high. So if you just want to see, the dividend that they paid in September was about R1.43. This is a gross dividend, so you need to subtract the 20% dividend withholding tax. And before that, they paid a dividend of 85 cents. So from this already, we can see that the dividend is increasing. But if you're interested in finding more dividend information, you can go to MoneyWeb there, and then you can search for Glencore. Once you are there on that specific company that you're looking for, you can find this information for the dividend yield. So from this, we can see that at the current share price, remember the share price fluctuates a lot, but the dividend that they've paid for that previous year is fixed. So whenever you're looking at a stock, do keep in mind that the dividend yield is largely affected by the share price. So from this, we can see that Glencore is a dividend yield of about 2.87%. So it's not a bad dividend given that some interest rates are low. But in addition to that, keep in mind that the inflation is around 5%. From this MoneyWeb page, there's a lot of information that you can find regarding any company. You can see the last dividend that was paid and when was that dividend paid. You can see some metrics that other people use in their analysis. You can see things like return on equity or return on asset, and then you can also look at the net asset value and the ratio between the price and net asset value, depending on whether you use these metrics or not. Personally, I don't use these metrics. My decision starts and ends with the chart, because these numbers can be good, but the share price could be on a downtrend. So I don't want to hold a stock that is on a downtrend just because it has good numbers or positive figures, right? So that's it about Glencore. Just a quick recap on the chart. I said that Glencore was approaching this resistance level and then it broke above this level. That's the reason I'm buying Glencore. Okay. The second stock that I want us to look at, for those that don't know yet, it's British American Tobacco. So British American Tobacco, it's well, the name says it all. It's a tobacco manufacturer in South Africa, but it's a global company. Okay, this is their global website, but this is the local website. As you can see, the extension there is .co.za, right? So yes, they manufacture tobacco. It doesn't matter how you feel about tobacco, whether it's a good or bad product. Most companies are now complying with ESG. So they're trying to bring in new products to the market, products that are less adverse to the environment, but also they just want to make sure that the shareholders are happy with the kind of businesses that they invest in, right? So as they say here, BAT is a large-scale tobacco manufacturer. that is producing locally in South Africa. They buy 90% of locally grown tobacco leaf, and they support over 200 commercial farmers with about 150 emerging farmers. And this results in about 10,000 agricultural jobs. So this is good if you are one of those people that are much more concerned about this kind of information. I'm not that concerned with that information. So it's a bit tricky to find result from this company. These are global result, not just for the South African operation. So if you're looking for one for South African operation, it's a bit tricky. But if you look at the financial year or the full year of 2021, as they say, even though they say so themselves, they say that they produced a strong result. What interests me from this result is this increase in revenue. Right, they have this 8.1% group revenue increase, which is good, and also the adjusted diluted earnings per share, they also increased by 6.1%. And finally, one other thing that I'm interested in is the profit. So you see, they say that the adjusted profit from this operation is up by 5.4%. Basically, we see a lot of positive figures. But now, what does the chart says, so that we don't just buy chasing those positive figures only to be disappointed in the end? For me, this chart is much more interesting. Reason for that, you see that British American Tobacco has been trading between this support and resistance for quite a while. It's just been bouncing up and down, and then now it is attempting to break above this resistance level. But do keep in mind that there were several attempts there where it attempted to break above this resistance level, but all those attempts, they didn't succeed. What we need to note is that if you look at that last attempt there, it didn't close above that resistance level. Here you can see the closing price on that day. It was just within that level. But these past few weeks, it did close above this resistance level. Although the price retraced a bit, it found support somewhere around 560 Rand per share. And then today, again, it closed above this level with a reasonable amount of volume there. So for that particular reason, then I'm bullish on British American Tobacco. Remember, this is the one that is listed in South Africa. As you can see, the currency is in South African rands. So now the current share price is 590 Rand per share. I'll be buying at the current share price with the stop loss just below 560 Rand per share. So that's going to be the risk that I'll be taking here. The target that I have is targeting here this 720 Rand per share, which was the previous high there. So that's about 1:2 to 1:3 risk to reward ratio. And then once again, just to touch base with the dividend, British American Tobacco pays quarterly dividends. So I'm just trying to find the dividend information. So here you can see that they have dividends from different exchanges. Remember, it's a global company. It's listed in multiple exchanges. One of the exchange is listed in the London Securities Exchange, also listed in the GSE, and it is also listed in the New York Securities Exchange. So we are just looking at the Johannesburg Securities Exchange. This company pays dividend quarterly, meaning every 3 months they declare dividend and they pay it. That's the nice thing about this tobacco company. It means that you'll be receiving a dividend every 3 months in a year. So you'll be receiving 4 times dividends in the year. So if you look at the dividends that they paid for 2021 so far, I have about 4 numbers there. Just want to make sure that you're looking. So it's 1, 2, 3, 4, right? So the dividend, it averaged about 10 Rand or so per dividend. So you will have received just below 50 Rand for the share that you own there, for each share that you own in British American Tobacco. So if you want to collect those 10 rands every 3 months, this is the stock that you should consider buying. So now let's quickly go to MoneyWeb and see what kind of information you can find about British American Tobacco. So it's BTI, not BET. BET is braids. Yes. So now when you look at this, the dividend yield, it has a dividend yield of about 7.53%. Let me redraw that. It has a dividend yield of 7.53%. So this dividend is greater than the repo rate, which is 7 point something percent, but it is also greater than the inflation rate of 5%. Remember, in that previous, well, we still have the Mzansi investor channel. Whatever content we have there, it's still going to stay there, just to show you what we had there. So now we still have this Mzansi investor channel. We have videos. As you can see, now we're talking about dividends. Mostly it was just dividend stocks, and we even started to discuss a dividend portfolio in EasyEquities. So we'll leave these 4 videos. In fact, we are going to leave all these videos in this channel, but we'll continue with the dividend portfolio in that trend trader channel. So you will see an update from this dividend investment that we are making. So those ones will now be available here on the trend trader channel, right? So now going back to this dividend, we're looking at MoneyWeb. Yes. So now you can see that we have a dividend yield of about 7.53%, which is attractive, given that not a lot of companies in South Africa has a dividend yield that is greater than the current inflation rate of 5%. So this is a good cash cow. Well, one thing that I can say about British American Tobacco is that, as you can see from this chart, from somewhere around November 2020, the share price has just been moving sideways for over a year, going up and down. So if you can handle these up and down movements, maybe the dividend keeping you comfort there, then it's a stock that you should consider adding into your portfolio so that you can get that income. Okay, so now let's move on. This is one of the South African giant. It's also a company that just keeps on paying dividend. So now we are looking at Clicks Group. Clicks Group is a healthcare company. They run pharmacies. Yeah, well, yes, they run pharmacies. There are pharmacies, they sell drugs, yes, legally, not drugs of abuse, just the medication that we need there. So yeah, we're also looking at Clicks Group. This is a company that is also known for paying a lot of dividends. Well, I didn't want to just dive into different brands that they have there under Clicks. I mean, if you talk about Clicks, a lot of people, they know Clicks, but they also have different group brands there. So you'll find all that information on the Clicks website. The information that we are interested in is the recent group result here. So what we see from the group result, we see an increased turnover. Turnover is the same as revenue. So we see a turnover of 10.2%. It's green. I'm assuming that it's an increase. And also we see a diluted headlines earnings per share. You see now for some companies, we're looking at earnings per share, just EPS. Now we are looking at headline earnings per share. So the difference between headline earnings per share and earnings per share, this headline earnings, sometimes a company has a once-off transactions. Well, it may not be just a single transaction in that particular reporting period. It could be a series of different transactions. The thing is, those transactions are once off. They are available for this particular period, but in the next period, they won't be there. Just to make an example, earlier this year, we had shares in Rand Merchant Bank, either RMI or RMBH, that thing, but it's part of F.I.R.E. That company sold some of its properties. So that was a once-off transaction. And then with the money that they got by disposing that asset, they paid the shareholders a special dividend that came from selling that particular property portfolio. So every time when a company does a once-off transaction, meaning that that thing will not be happening in the next reporting period, then it affects the headline earnings per share. Ideally, I always look at the earnings per share because they just report what the business does on a regular basis. Everything that won't change. If Clicks is a pharmaceutical company or a pharmacy company, not pharmaceutical company, it's Aspen that is a pharmaceutical company, right? Clicks, the normal day-to-day business is earnings per share, but those few extraordinary things that happen, they are classified under headline earnings per share, right? So now let's look at what else can we find here, right? We said that the revenue is up, the headline earnings is up, and also we can see that now in this case, they make this example, they say this diluted headline earnings per share adjusted for the impact of the civil unrest. We saw that around June, July we had an unrest in some part of the country. KZN and Gauteng were the two main provinces that were affected. But despite that thing, we saw that Clicks paid a dividend of 4.90 per share. So like I said, today we are just discussing companies that can pay you dividends and companies that are on an uptrend. So you're going to get the best of both worlds because you'll be receiving dividends from these companies, but at the same time, you will also be experiencing capital appreciation. But remember, capital appreciation solely depends on the performance of the share price. If the share price stops moving up, it moves sideways, or if it even falls, then it means that if you set a stop loss like I do, that stop loss might be triggered. Remember, in the previous video, we talked about how can you lose money in the market. We talk about that. The market can reverse and then it can trigger your stop loss. If you missed that video, make sure that you check it. We'll leave a link in the description. It's the recent video that we made. So we see they also returned 2.2 billion to shareholders in the form of dividends and buybacks. So the difference between dividends and buybacks, remember the company does business, they provide goods and services, they generate revenue, they pay tax and everything, they cover their expenses. Then if they have some money left, the board can decide to declare a dividend. Then if the board declared dividend from the profit reserves, then that one we call it a dividend. But they can also use some part of those profit to go back to the market to buy some of the listed shares, meaning that they reduce the number of shares that are being traded in the market. If that happens, what we expect to see is that the value of each share that remains in the market is going to increase. So sometimes a company can be profitable and decide not to pay the dividend and use that money to do buybacks. So as much as investors like to see dividends, buybacks are also good because even though you didn't receive money, but the value of the shares that you are holding is increasing. So whenever a company reports a result, whether they declare a dividend or they don't, you need to just follow up a bit just to understand the rationale behind that decision, why the company is not paying dividend. Okay, so now let's go and look at the chart of Clicks. So for those that don't know, I'm using TradingView for charting. I've been using TradingView for quite some time now, and I'm happy with it. So as you can see here, there was this resistance level that we noted previously. So Clicks has been trying to break above this level. Then somewhere around August, September, it broke above this level. You know, we always talk about breakout and come back and retest. So that's the same thing that we saw here. The share price broke above 208 Rand per share. Then it came back to retest this level, then consolidated a bit. Then just before or around December, then it continued to trade high. So at this time, this was the best time to buy Clicks shares because we would have gotten them at about somewhere around 285 Rand per share with the stop loss just near 270 Rand per share. But today we are not talking about that setup. Today we are talking about the breakout of this level, right? Which is a confirmation of this uptrend, that the uptrend is happening. So now the share price is somewhere around 319 Rand per share. So if we are buying at this level, our stop loss, it's either it's going to be somewhere around 300 Rand per share or just below this, somewhere around 295, just to take into account of this trading weeks there. Like we normally say, technical analysis isn't that complicated. When we use technical analysis, we just look for those repeatable patterns and we exploit those patterns. We don't really need to know what the business does, like compared to the people who use fundamental analysis or value investing. We can just easily look at the chart, look at those patterns that they keep on coming, and then we exploit those patterns. For me, it is that simple. For some people that are still not familiar with technical analysis, they might find it difficult. So now I just want us to look at the dividend yield of Clicks. But from here, from the chart, we can see the last 2 dividends. So in January, they paid a dividend of 450 per share. Remember, it's gross dividend. We're not subtracting the tax. And then in June, they paid 142, which was lower compared to the dividend that they paid in January. So they've already declared a dividend for January 2022. That dividend is going to be R3.47 cent per share. So I see that the payment date is the 31st of Jan. I'm assuming this date is the last date to trade. So if you buy these shares before the 26th of Jan, you can qualify to receive that dividend. So now let's go to MoneyWeb. Once again, we just want to see the dividend yield. So you see the dividend yield here, it's just around 1.56, which is not a lot. It's actually less than 2%. But then let's see if we can calculate the dividend yield. I just want to make sure that if it's a final result or if it's interim result, because then it will be easy to calculate it. Yeah, let me go back there. Right, let's first look at how MoneyWeb calculated it. So the last dividend, according to MoneyWeb, was paid on the 21st of October there. So we see that the last dividend was R2.48. Just want to do a quick calculation to see if they're talking about a gross or a net dividend yield. So they're talking about October, but this is just the earnings there when they reported the result. The last dividend should have been somewhere around July. Okay, fine. There's no need to calculate the dividend yield. But, well, that 1.56% isn't that great. Again, it's better than nothing. If you're not investing, you're not going to get that dividend. And also, we're still going to benefit from the capital appreciation, right? As you can see that year to date, clicks is up 24%. So if you were invested since the beginning of 2021, your capital would have grown by 24% plus this dividend that you will have received. Okay, so now let's look at the last company. But before we do this, I just want to ask you that please subscribe to the channel. If you enjoyed the analysis that you have done so far, make sure that you click like to show that you enjoyed this video, and it would be good if you can share the link of this video with as many people as possible so that they can have an idea of the stocks that we will be investing in, the stocks that will be paying us dividends. Hopefully there's also going to be capital appreciation. All right. So now another thing, okay, the last company that I want us to look at is Capitec Bank. Everybody knows what is Capitec Bank. Well, besides being the bank that has a long queue, but it's a bank that grew either from R3 per share all the way to above 2,000 Rand per share. It has a good story to tell. A lot of people are interested in Time Bank. Well, some people are interested in Time Bank because they consider it to be a good bank, but also because of the African Rainbow Capital share price, which was below 5 Rand, probably now it's above 5 Rand. So in their minds, they would like to see a Time Bank to grow and reach the size of Capitec Bank. Well, I hope that will happen. I mean, African Rainbow Capital as a business is a good business. Time Bank, it will have to compete with all the other existing banks for market share. Okay, so now what we find here, Capitec is just stingy with their results. When you try to go to financial results, they just take you to a YouTube video, but I'm not interested in watching a video there, so I will just use whatever is available here. So they say that the headline earnings increased by 513% to 3.9 billion Rand, right? These are the unaudited financial results for the past 6 months that ended in the 31st August 2021. So from now on moving forward, I'll be paying more attention and probably watch the meetings from this company, because the website doesn't say much, so it's not helping. But for me, it's not a big deal because I can always get all the information that I want from the chart, which is why now we're going to be looking at the chart. Okay, so for some people, especially those people that like to to invest in penny stocks. This is not a stock that they will consider investing in because it's just expensive in terms of rent value. It's not a matter of it's overvalued or undervalued. Some people, they just look at the price of something, then they make their own conclusion. But for us chartists, as you can see here, we saw that Capitec, it will form a base, then it will break above that baseline, come back, form another base, then break above that baseline, and then we see another base here. We saw that it broke above this baseline. So that is good enough to tell us that the stock is on a nice uptrend, as you can see. I mean, it's just what you see with your naked eye. You don't need to read a complex financial statement for you to see that Capitec is on an uptrend. So at this moment, you see that it had a bit of a consolidation there. So you can buy at the current price of 2,030 Rand per share and have your stop loss just above 1,900 Rand per share. Or if you have a higher risk tolerance, you can try to stick your stop loss just somewhere around 1,850 Rand per share and then take that risk. It depends on your risk appetite. But the point of this video is to show you that Capitec is on an uptrend. It does pay dividends, and also we just want to take advantage of the thing. So it's not a question of the price of Capitec. We are happy to pay 2,030 Rand per share for Capitec share because it's on an uptrend. If you don't feel comfortable paying that amount of money, then you might as well look at other companies. But just keep in mind that Netflix share, let's just quickly look at Netflix because I want to make sure that I give you correct information, right? So if you look at the Netflix share price, it's about 618 US dollars. So if you convert that to rands, that is just above 9,000. Let's see, 618 times 15.5. Yeah, that's about 9,500 Rand per share. So if you are comfortable buying Netflix at the current share price, there is no need for you to chicken out when it comes to Capitec. But look, now I wanted to talk about Capitec, but now I see a setup on Netflix. Basically, it's a swing trade. You see here we had this breakout level, and then now the share price is back at this breakout level. You saw that the stock traded, it attempted to go to about 700 US dollars. So you can take a swing trade, enter at the current share price, targeting that previous swing high with the stop loss here. So then again, that would give you about a risk to reward of 1:2. You see, that is why I love technical analysis. You don't really need to know a lot about the company. You can just look at the chart and look for a path of least resistance. That doesn't mean that the setup is going to work. That is why we always talk about the stop loss. For example, at this moment, we anticipate that the share price is going to go up, but just in case the share price, it comes back, it reaches 575, and then it breaks below 575, then we will exit that position, meaning that if the share price continue to trade lower, we would have limited our loss. But if we have a take profit here, once it reaches this level, you can actually decide to take partial profit, so that if the share price break and retest this level and it continues to trade higher, then we make more money from this. And I mean, unless you are a certified Warren Buffett fan, there's no reason to hate on technical analysis. But then again, let's go back to Capitec, which is the last stock that we spoke about. Just a quick recap. We are buying because Capitec is coming outside of this base. Even though it broke above this level, we saw that it made a bit of a tight consolidation before it broke above this level. So these are the tradable levels that we're interested in when it comes to Capitec. And just before we wrap it up, let's maybe look at the dividend yield of Capitec. So you see under Capitec, there are two kinds of shares. There are the ordinary shares that I normally buy, and then there are preference shares. Some people, they do buy preference shares. They understand them. Personally, I don't buy preference shares. There's nothing wrong with them. It's just that I don't understand them that much as I understand ordinary shares. Okay. So for the dividend yield of Capitec, let's see. It also has a dividend yield of about 1.39%. The last dividend that they paid was 12 Rand per share, and that dividend was paid on the 30th of September. So we can see a lot of other information there again, like return on equity, return on asset. We can see the net asset value. You see now, if you are the value investor, what you see from this, let me close this app so that I can read the numbers with a sober mind. So that seems like this is about 2,700 Rand share price. Let's see, I just want to be sure how many zeros there. Well, it can't be that they say that it's 270. Remember, some of the prices are in cent. So if I'm assuming that this is in cent, then that means we need to divide by 100. Then that gives us 276 Rand per share. At the current 2030 divided by 276, we get that 7.31 ratio. Wow, I wonder how did they calculate that net asset value? Well, I'm not disputing the number. It depends on what it's on your mind. If you believe that Capitec is not worth 2,000 Rand, I mean, you see from this net asset value, if you believe that Capitec has a net asset value of 276 Rand, but it's trading at 7 times the price of that net asset value, I dare you to short Capitec. Then give it 6 months. Let's see between me, who's going to buy Capitec shares, and you who's shorting Capitec. Let's see who will have made money in that 6 months. I'm not saying that there's something wrong with the net asset value. I mean, it's just a figure. Some people are smart enough to calculate these numbers and come to these conclusions. But for me, like I always say, it's technical first. As you can see, from September 2020, Capitec grew from about 840 Rand per share all the way to about 2,030 Rand per share. So that's it for today. Just make sure that you click subscribe on that YouTube channel. You can still subscribe on the Mzansi Investor channel. We'll still be adding content there. We're still going to decide what kind of content we'll be adding there. But now from this channel, you will see there's going to be a lot of technical analysis and dividend. This is the video that I spoke about earlier, how a stock can lose you money on EasyEquities. So make sure that you watch that video so that you understand the implications of investing. And if you're looking to grow money the slow way, there's this video here where we're talking about how you can use ETFs and EasyEquities to generate wealth in the long run. We also touched a bit of real estate investment trust. So the channel has plenty of videos. Just make sure that you spend some time on it and you watch those videos. So that's it for today. The companies that we spoke about Glencore. We are bullish on Glencore. We are bullish on British American Tobacco. We are bullish on clicks, and finally we are bullish on Capitec. So that's it for today. If you have any questions, comments, suggestions, complaint, make sure that you leave them in the comment sections. We will attend to them. Once again, if you found this information valuable, make sure that you click that like button. Just make sure that you smash it and you share this video with as many people as possible. Thank you. We will see you in the next analysis.